Worldwide markets this week. Naspers approves a share split. UK debt at worst levels since 1998. Powell pivot. Trump fires Fed member and buys 10% stake in Intel. Results: Sasol, Grindrod, ADvTech, and Nvidia aftermarket close on Wednesday. What to look for with those Nvidia numbers. I'm Simon Brown. This is Worldwide Markets, episode 645 for 27 August. We are recording Tuesday lunchtime. Worldwide Markets, powered by Standard Bank Global Markets, Retail, and Shift, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest forex rates anytime, anywhere. Shift, powered by Standard Bank. So it was the Naspers AGM on Monday. It's a bit of a weird exercise because, of course, you've got the Naspers N shares. That's what you or I would be holding, and they have a vote. But then there's the A shares, which are, I think, 1,000 votes each. So really, the N shareholders don't have much to say. But there was a resolution that got passed, the last one on the AGM, and they have decided to, I think they used the phrase, divide the stock. In essence, it will be a stock split. The stock is currently around 6,000 Rand. It'll split 1 for 5. So if you had one share at 6,000, you'll have 5 shares at 1,200 each, which leaves you in exactly the same place. Their logic is that, well, smaller shareholders haven't got 6 grand to buy a single Naspers share. And that, a lot of you are saying, hey, easy equities, and that's fair, easy equities, but not every broker enables fractional shares. So it will make a easier entry for smaller shareholders. There is no date. The board will still have to come back with a date. It will be announced. In essence, your quantity goes up 5-fold and price goes down 5-fold, and you are in exactly the same place as always. Next, now I get to Jackson Hole, which was on Friday last week. Jerome Powell was chatting at Jackson Hole. As is always, it will be his last speech there last time attending as chair of the Fed. His chair status expires in May. He's then got another 2 years on the Federal Reserve. Will he grin and bear it? Will he exit and take some time out, eat the pressure from Trump? But the big thing that he said was that they have a dual mandate. Their dual mandate is price stability, i.e. inflation, and full employment, i.e. unemployment rate at around about, 4.5%, somewhere around about there. And he essentially said, we are going to start focusing on the jobs data part. Now, there is a meeting. It is I don't need to check my calendar. 17th of September, there is an FOMC. Day after is an MPC for us. FOMC in 17th September. We will have more data out before then. More jobs data, more inflation data, more PCE inflation data, and so the list goes on. There will be a lot more. But in essence, they're saying, we're going to focus on jobs. And that last jobs number that came out wasn't particularly great. Now, maybe they're also seeing something that's not in the data. What I mean, there are 12 regional feds in America. Each of them has a chair, and those chairs do a lot of work within their broader community. Now, some of those communities are 6 or 7 states in size, but they go and talk to business. And the Odd Lots podcast has had a couple of points around what's been happening on those talks. They've spoken to a couple of Fed chairs, or not chairs, regional chairs, and there's uncertainties the watchword. Now, if you are an uncertain business, you're not employing anyone. You're holding back. Yes, you can fire easy in America, but you are holding back on doing anything. So what I think we're probably going to see is jobs data not getting markedly better. The market is now absolutely pricing in 2 rate cuts, September and December, with a plus 90% certainty. Although remember, they'd priced in 6 cuts for last year, and they got 3, September, November, and December. So, T's and C's apply. And some folks are also pricing in a November rate cut. So we're going to start getting rate cuts. It does mean that inflation is the risk. And there are 2 points on inflation. Firstly, I wonder if Jerome Powell isn't perhaps not that stressed by inflation at 2.5% or 3%. What it does do effectively is deflate away the giant plus 30 trillion debt pile that the American government has, because every year it effectively decreases by inflation. So if inflation is 3 rather than, say, 1.5, it deflates at twice the speed. Secondly, and he spoke about this, and we've seen a bit of it, although he didn't mention it specifically at Jackson Hole. What are we seeing with tariffs? They are having an impact, but they're not all coming at once. Different markets, different economies, different countries having different tariff rates at different times. So the tariffs don't all arrive at once. In some sectors, the companies importing are trying to take some of the tariff pain. Some of the exporters are trying to take it. So that tariff pain is being spread over time. And that means that, yes, it will come into the inflation, but it won't be one big giant shock. It will be a series of sort of little shocks. And then, of course, go forward a year, because inflation is year on year. Well, there won't be in the numbers. There won't be, unless Trump goes and doubles all the tariffs in the next year. He might, but who knows? He might. But unless he does, it's in the base, and it'll quickly fade out. Much as what we saw to a degree with the 9% inflation back in 21-22 in the US. The initial sort of fade away is fairly quick because prices have stopped rising. And I always say it's that last sort of getting it from 4 to 3 to 2, that's going to be quite hard. So that certainly is it. We're looking for rate cuts. Market is loving it. We are on a risk on trade. But here's a fun fact I got from Twitter. If you bought Standard & Poor's 500, S&P 500 at 23 times earnings at any time in history, in every single case, your annualized return over the next 10 years is between +2 and -2. In other words, call it zero return over the next decade. S&P currently trading 23 times. That market is expensive, but for now, the world is going rah-rah and things are lovely. The one area we do have to look out for is the dollar. On the news on Friday, we saw the dollar quite markedly weaker. It was down 17.44 against the rand. I reference the rand because that's the one that I am watching more than any other. And we can quickly grab a chart here. Dollar index down at 98.3. It's actually rallied a bit this week. It was down lower at what was last week's low. Last week's low was 97.73. So we're up about 60 points at this point in time. But make no mistake, and the chart is absolutely screaming, weaker dollar over time. That is what we're expecting. And if you remember, back in the day, was it July, I did a look at what is Trump's economic policy, and one of those policies is weaker dollar. Quick aside to there as well, early Tuesday morning, he also fired, and I need to find her name, Fed Governor Lisa Cook, claiming that she lied on bond application forms. I don't know whether she did or didn't. Does Trump have the legal status to fire her? He says he does, and in his letter, he's stating all his cases. This is not going to go away. But what Trump is patently doing is looking to pack the Federal Reserve with people who are much more interested in cutting rather than raising rates. And I mean, we're entering banana public space here, absolutely. I mean, Turkey's done this, Argentina's done this. I mean, the countries that have done this are banana republics through and through. Now then, of course, there's the Intel story. Now, we need to go back to the CHIPS Act of 2 odd years ago. And the CHIPS Act, the idea was that what America discovered during the pandemic is that they don't make very many chips, and that puts them at risk. Things happen, pandemics, wars, whatever the case may be. They need to build some chip fabs in America. Europe's doing the same. TSMC has built one in Germany. They've built one, I think it's down in Texas, perhaps, one of the southern states in the US. But there was also a whole lot of money from the Biden administration to say, hey, here's money if you go and build a fab. And that was the deal. You had to go and build the fabs. Intel was getting a whole bunch of it. And now what they've done is Trump has basically said that money we were going to give you to build fabs, we're going to give it to you. You're going to build fabs, but we want shares for it. They get about a 10% stake. It's about 433 million shares, costing about 8.9 billion. It was a discount, about a $4 discount to the almost $25 price of Intel. They get no board seats, they get no voting rights. So in that regard, it's not particularly powerful, but it does send a message, right? It is. And we've got the story right now, which is that the Trump administration is looking for other companies to take a position in. So this is more than just the CHIPS Act. Remember, Trump said he wanted to have a sovereign wealth fund, but this is a weird way to do it. Look, we all understand how this is not capitalism. This is socialism. This is nationalism. Call it what you will. It's not capitalism. It has got the market a little bit excited last week when the news first broke. Intel rallied quite hard. There's a good floor on Intel at about 1880. But I got to say, Intel so they produce most of the others. AMD, design the chip, TMC makes it. NVIDIA, design the chip, TMC makes it. Currently, Intel has no PE because it has no profit. It's got a forward PE of about 107. Price to book is 1.1, which is about the cheapest it's ever been. There is no dividend because, again, they don't have any money to pay dividends, any profits. Their share count is going to increase quite markedly with the shares that they've issued. Earning expectations, not a lot, although a giant jump up for financial year 2026. No expectations for the current year. The question is Intel going to get back to basics? Is it going to collapse in a heap? Probably not. It's got 37 holds on consensus, 2 buys a strong buy, and 2 sells and 2 strong sells. I've never seen so many holds on a stock in my life before. The target range is between 14 and 28. The average is 24.55. Am I rushing out to buy an old school fab maker that has just got a new CEO, has been struggling for a decade or more, and that has now essentially been, nationalized by the Trump administration? Thanks, but no thanks. I'm really not interested. And if we have a look, this has been a $60 chart at points, but Intel, and in fact, it was a .com chart. It was 40 odd in the .com boom, and it took until May 2018 to get back to those .com levels, and it is now below .com levels. This is, as I said, I thanks, but I have no particular interest in it. Let's look at some results coming out. Let's start with ADvTech. ADvTech is a stock that I hold. I have held it for a long time. I like the story around education. I also like the way the business is run. And this was the highlight from the results. And what we got is 5-year CAGR on dividends of 24%. So it's more than doubled. It's gone from 19 cents to 45 cents. Revenue CAGR 5 years, 13%. Operating profit CAGR, which is compounded annual growth rate, is 18%. Normalized earning per share is 20%. It's gone from 55 cents in 2021, these are half-year numbers, to 113 cents in 2025. More than doubled over the last 5 years. These were stellar results, really, really strong results. And I think perhaps the one of the key points is if we contrast it to Kira. The ADvTech is still seeing increase in student enrollments. If we strip out the Africa, which is the new area, and just look local, schools about 4%. But what we have seen is that Kira was down 1.4%. Kira also had to write down a whole bunch of the value of the land, about 60 or 70 million that they've got in their land bank. The censors, and Anthony Clark wrote about this on the Twitters, that Kira had been a little more aggressive on fees, and they've essentially squeezed out their prospective market. Whereas ADvTech's been a lot more cautious with fees, and in fact, in some cases, and they were doing it targeting in different brands, they were looking at fees that were sub-inflation. They've also got the tertiary division. They're opening up in Ghana. They launched that earlier in the week, last week rather. They've got the big campus, used to be the F&B campus on Grayston Drive in Sandton. That is going to hold thousands and thousands of students. It's going to be a traffic nightmare. That's my problem. I don't go into there very much. But over the last 5 years, we have seen the stock up, fivefold, but of course 5 years ago was pandemic. It's been broadly going sideways now since late last year, but it has been a stellar. And there's three. There's ADvTech, Kiro, Stadio. Stadio is exclusively tertiary and it is predominantly distance. Kiro is exclusively schools and it is predominantly middle income, and ADvTech is a blend of all. ADvTech's also got a resourcing business. It's less than 5% of their business. Really, really good numbers from ADvTech, and I am a very, very happy shareholder in that regard. And the stock at current levels is not expensive. We've got a 3% dividend yield. We've got a price, a PE ratio of around 15, a price to book maybe a little bit pricey on the price to book. I don't think we're going to get much in terms of analysts' insights. There's one buy, and they have a 39 Rand 84 price target. That is a very specific price target. The other big set of numbers was Grindrod. They came out on Friday. The numbers in themselves were fairly good. They've also been paying off a lot of selling off a lot of businesses and used that for dividends and the like. They also had the announcement, Transnet has awarded third-party access to their rail network. They announced that 11 companies had been approved of the almost 30 who applied. Grindrod confirmed they were one of them, and they're bringing their coaches or their rolling stock back from Sierra Leone. When I chatted with Kalani CEO, I'm trying to think, some 4 years ago, he wasn't sure if they would bring it back from Sierra Leone, but they are going to. Look, the process is going to probably only really start to happen in maybe late 26, otherwise 2027. It's going to be a little ways off still. This stock is cheap. Your price to book is 1, which is kind of more or less where it trades. In fact, its mean is even lower than that. Price earnings is 8-ish. Dividend yield is sub 3. This is a cheap stock. And if we can start getting sort of some traction in terms of Transnet, Grindrod can certainly benefit from that, as does the entire country. Only one analyst, 17 Rand target, and 15.22 is the current price. The other stock with results, and this was Monday morning, was Sasol. And I spoke last week, and I said last week that, break of 100 got me interested. Well, here we are, 121.57. That is Monday's close. Tuesday, we're down about 3% last time I checked. The results were not bad. Free cash flow, really good. 12 billion, up from 7 billion. But of course, 4.3 billion of that was the money from Transnet, because of the court challenge, which Transnet then stopped doing anything about. I think the stock goes to $140. I think that's easy enough for now. There was a very solid entry at around about either the 80 for the aggressive entry, or in my case, the 100, which was a much less scary place to be entering. And it is looking solid. Is it? Are there problems behind them? No, not really. I mean, the worst is probably behind them, yes. They need chemical markets to start improving, just globally. They would like an oil price higher. They would like Iran weaker. I mean, lots of those sort of T's and C's. But at this point, Sasol's definitely got some legs. So, I mean, why not? If you are in it, enjoy it. And to those long-suffering Sasol shareholders, now is your moment. It has been, as I say, a very, very long time. Although weirdly, and I've mentioned this before, and it's not. Sasol was all over everything early this year, late last year. Best stock to buy, etc. And then people just backed away. And it's always the case. And then it got to a really good buy place, and there's no chatter on the Twitter. Here's something which someone sent me. Have you seen this, they said. The company name is Rheinmetall. It is a German company. It is up, some 100-odd% year to date. In fact, call that 170-odd% year to date. And why is this interesting? Because they are in the defense. They're a German company, and they provide mobility, security technologies in Germany, rest of Europe, North, Middle, and South America, vehicle systems, weapons, and ammunition. That has got people very excited. And in fact, it's why I was saying early this year that I was buying some European ETFs. The question I was being asked is this overdone? Yeah. The mean PE is 23. It's currently on 89. The forward is 45. The mean price to book is 3.6, which is quite chunky. Currently it is on 17 times. Everyone saw what I and everyone else saw and said, something's happening here. Should we get involved? And the answer is, well, if you did, you've done great. But if you didn't, you might actually just have missed the window. Talking of windows, the UK 30-year bond. So I don't usually really much care about the UK's 30-year bond or the UK generally. But of course, when Liz Truss was getting what was it? The budget, which everyone hated. And it hit 5% and she bailed. She fired her finance minister and she got outlived by a lettuce. But if we zoom this chart out, we are now back at levels last seen in 1998, June, which is 5.606%. You think the US has got challenges? Their 10 years at 4.2. This 30-year is at 5.6. And it has basically been rallying. After Liz Truss quit, it recovered and then it carried on going. The UK is in a heap of pain, and that number is causing a ton more of pain with it. That is not particularly a space that you want to be, and it is only going to hurt. There's no sort of pleasantries here where it's a case of, we'll make a plan. The plan is your debt is growing, and at the same time, your cost of the debt is growing as well. Worldwide markets, powered by Standard Bank Global Markets, Retail, and Shift, the global money app that puts travel, shopping, payments, and investments in the palm of your hand. Enjoy the cheapest Forex rates anytime, anywhere. Shift, powered by Standard Bank. Quick last update on our ETF database. I just this morning added active ETFs. So you'll find that justonelap.com/ETF database. And we have a power hour Tuesday evening. So if you're listening on Tuesday, you can still get into it, 5:30. Otherwise, you'll find the video from late Tuesday evening. But let's leave it there for this week. My name is Simon. As always, I will be back again next week. I'm taking a break in September, but I'm going to do a timeless podcast to drop in on my second brain and working with that logic. But until next week, my name's Simon. Look after yourself, and if you can, look after somebody else as well. Cheers all.